The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Monday was an abysmal day in the cattle futures trade. There's no doubt about it. Limit lower, expanded limits lower, tested in feeders and in fats. Meanwhile, though, the grains and oilseeds sharply higher, particularly led by soybeans amid all of the talk over the weekend and Monday about U.S.-China trade and frameworks and discussions that are upcoming and so much more. Let's try to unpack this and take a look at things. Joining us for market analysis and perspective, John Heimberg with Total Farm Marketing. John, what a Monday it was. I'm sure you have had a busy day in your trading desk. I mean, man, oh man, you got cattle on one side, rough day, grains, positive day. What a volatile start to the week here, John.
Yeah, I spent most of the day working with the cattle guys actually today, and most of the grain guys were set up for this, so just let things keep working there. But yeah, it was a very interesting market day, obviously, with the news over the weekend. And now what? That's the big question that comes to my mind. Okay, do we have any numbers yet? We haven't seen anything happen. Now we got a solid 80+ cent rally in soybeans. Have we unfortunately priced ourselves back out of the market? Those are some things to worry about. Plus, on top of that, a lot of farmer selling, I think, kicked in today, especially in that December corn. We couldn't get through 430 today. And I think that was the reason why, as you saw those spreads unwind today, the December versus March, December versus July type spreads. That's kind of what happens when guys aren't selling. The end users buy the spread just to kind of get coverage. And when people start making some sales, or we hit price levels that pull some triggers, then they turn around to exit the spreads. So I think that was a little bit of what happened in the market today as well. So we'll have to see what tomorrow gives us. And the news wires are still pretty fresh right now. Again, we still just don't have a lot of clarity other than there is a framework together, at least at this time frame, in terms of a deal with China.
Yeah, and that framework, that's the thing that I think is getting lost in some of the headlines. It's a framework. Nothing is done. Nothing is signed. They're still going to talk. Things could change. So a lot of this is, uncertainty fueling us to the upside here in corn, soybeans, wheat as well. I mean, all three of the grain complexes were higher on the day. You mentioned some of those target points, though. 430 D's corn. I look at Nove beans were coming up on delivery there, 1067. Jan beans 1085. I just think about this, and to your point, a lot of grain guys were kind of set up there to leave the top side open. I mean, this has to be at least an opportunity for some folks to take a look at their balance sheet, their risk management, et cetera, John.
Yeah, there's still not a lot of meat on the bone, especially in that soybean market, but it's at least a little bit better, in that regard. But what have we said to people? Let's talk incremental sales. You made 80 cents off the lows. Do you move some beans here? Still look at bull call spreads, re-own or call strategies. Keep the upside availability in front of us. I don't like being Debbie Downer, but I try to keep things real and talking with people. Realistically, Brazil drives the global soybean market price now. They're the largest producer of beans. Just like Russia kind of controls the wheat market price, and we kind of control the global corn price because of us being the largest producers on a global scale. So that's still something that weighs out there. You got a big Brazil crop forecast. We're coming off a record crop. There's a point here where if all of a sudden Brazil beans look cheap again because U.S. prices are climbing, that's going to be a rally limiter. And maybe that was some of what we saw today. I saw at the end of the week, U.S. beans were about 2 weeks ago, we're about 80 cents a bushel under Brazil. And now on Friday, we're about 20 cents a bushel under Brazil. And obviously we're up 20 plus today. That pretty much puts us in line with Brazil. So, like I said, with this framework of a deal, there was no set quotas. They're going to buy XYZ beans. It just said they would look to resume buying beans again. Well, they're still going to be the value customer that China is. They're going to buy what's cheap, what's valuable, and hits their situation unless they make an extended effort to pick up things that go into their, government reserves. That could keep things still a little bit limited in a window that's closing in terms of value fairly soon, as that first early harvest of those South American beans starts coming in here mid to end of January into February. So that's a little bit of thing I'm watching. I love the fact we're higher today. I like the technical move. Maybe like the cattle market, except to the other side. Maybe the momentum traders jump on this and push this thing. The technical traders, they've unfortunately hammered the cattle market with those types of trades the last couple of days. So maybe that's something that gives this market some boost. You get corn through that 430 window. You're talking taking out the downtrend line from last February's highs. So there's some opportunities here, but we need probably one more good push to get it. And I'm not sure the market's ready to do that now until there's something concrete in front of us in terms of numbers and things of that nature.
Any other thoughts in the grains? I want to make sure we spend some time in the livestock trade, John. Anything else for you on the grain side you mentioned today?
We had a good day in that wheat market today, too. And the reason wheat jumps with soybeans is that was a little bit of the talk last week that China was actually looking at some wheat already. Some of that was because of wet conditions across key growing regions, making things difficult for the winter wheat planting in their area. That was also talk for some corn as well. Some harvest conditions were pretty rough. So we'll have to see. That's why we saw the optimistic side of the wheat market, which, realistically is pretty dang cheap here. Sub $5 just a few days ago. So nice little turn there. So I think that helped out the corn market today, especially the deferred contracts a little more. So we'll have to see if that can continue. So a lot of wait and see yet, though, in terms of the news wires with the grains.
All right, let's go to the livestock and cattle trade. Of course, again, rough day, whatever adjective you want to use to explain it. I mean, expanded limits, we used them. Really just not a great look when it comes to the cattle complex here. I think the thing for me I'm going to be curious about is what happens this week with the cash trade with futures going down sharply. I mean, what's your view on what you saw here in cattle Monday and really even back to Friday as well, John?
That's going to be the secret to this whole thing is going to be the cash market here. And I spent a lot of days just talking with the guys, repositioning positions, things of that nature. It was very nice to see the live market get off of limit down. We got retail values today, choice carcasses higher again today. We're about $11 to $12 higher on choice carcasses here over the last 6 or 8 sessions. So we're in that demand window for Christmas here now where the beef rib kind of drives the price of the carcasses. So that's kind of one of those things. It's like we're selling off, but the fundamentals are actually supportive. So can this kind of be finding a bottom? Possibly. Feeders is a little bit different animal, just a little thinly traded market, and nobody wants to step in front of a falling knife right now. With them finishing limit down, we do still have the expanded limits, same as today for tomorrow. There's no like double expanded limit type trade. So we'll have to see. Today I was doing some repositioning, taking some profits on hedges, putting puts underneath just to kind of say, hey, I'm going to challenge this thing to say we're down here on that December contract. Still trading today now $10 under cash. October is probably $7, $8 under cash. We're 238, a little 240 last week. It's not going to fall out of bed here, or you're just going to see the producers just lock up the barn doors and say, no, you need the cattle. The demand is still good. You're seeing that in the retail value, especially with the Christmas holiday season right around the corner. So I got a little bit of optimism that the momentum traders and the techie traders are really hammering this thing might be getting satisfied with, especially the way today, you saw that limit down look on the February and later cattle, and all of a sudden saw the bid started to climb, the option bid started to move. And so that told me somebody was tipping the toe in and buying some stuff here today. Then obviously we got ourselves off lock limit. So I'm encouraged by that. Obviously, I don't think we're out of the woods yet just because the way this thing can trade, you get a dead cat bounce and fall again. But you just look at fundamental value. The cattle market might be a little cheaper given where we are, and that we've taken, pretty good price, drop out of this. Same thing on the feeder side. I'm really watching the October feeders. Cash index today was actually higher today, trading 367, 345 in the October feeders. They cash settle against the index. They close on Thursday. So something's got to move here to get those two back together. Now, usually we go a couple days after the expiration of the October contract before you cash settle, but I'm looking at $22 difference between the October feeders and the cash index, and the index was higher today. So that tells you that we're pretty undervalued here, and it might be a spot if you're looking at some hedges on these front ends. Do you make some adjustments on those today? and hopefully we can see some recovery led by the fundamentals of the market. Obviously President Trump made the comments to get prices down, but at the same time, what can we fundamentally change here? We're not getting more cattle at this time frame that are going to be ready for market by the first of the year. Yes, we bring Argentina beef in, or we take the export tax off of the Brazilian beef, knock that 50% tariff off if they get an agreement there. That just brings a different beef that comes into a lower end market, restaurant trade, ground beef type trade. The beef carcass this time of year is driven by the beef rib for Christmas, and that's why we're seeing the carcass strength that we're seeing.
And I think about this too, John. It's not something where I think folks need to wholesale panic here with their marketing plan, but maybe you just need to really take a sharp pencil to things and at least be in tune with how this market trades this week.
Correct. I agree with that totally. Again, look at where you're at with things, look at your cattle numbers, make sure you got coverage, that type of thing. It's a difficult time because you're watching prices fall, but then you got the cash market telling you something different. Again, this is a technical washout. This is done by the momentum traders and the algo traders that were triggered. Then we blew some stops, and then that set us up for the next day. We'll have to see how this comes around. Now, again, 1375 limit for feeders tomorrow, 1075 for cattle, live cattle. If all of a sudden we think this thing turns, you're going to see those momentum traders spin this thing right back if they feel like they can. So that's something to be cautious of here. Again, just evaluate your position, your account, your cattle. Make sure you're just asking the right questions here. And it might be an opportunity to move some money to the sidelines and reposition and challenge this market to go back higher. So that's my thoughts.
Hogs a little bit lower Monday. Seasonality maybe here at play. It just feels like everything going on in cattle's not really tying itself into the hog trade here, at least right now.
I would agree. And obviously it's hard to be a buyer of one side versus the other when the other one's tanking. I know the buy hog, sell cattle spreads they're loving it right now in terms of how things are moving there. The other side of this too, if we got some type of an agreement building here with China, that should help the hog market in terms of some of those potential imports maybe coming back a little bit. And in my mind too, it should help the cattle market. They liked U.S. beef a lot before the trade war kind of kicked in. The quality beef that maybe we can get back into that market there as well. Hogs, though, I still watch December index at 92, coming down, but we still got a pretty big gap there. That $80 level, 80, 60, 80, 50 is a 200-day moving average under these hogs. That'll put us down about $11 off the high. It looks like we might be a pretty good spot to, step in the market. There could be some value there. So I'm kind of watching that area, and maybe that's the point we step in this market with some calls or look at a little bit of reownership on some futures.
Any quick notes in the dairy trade? Looked like cheese prices maybe a little higher to start the week, things like that. Anything you saw over in the dairy complex here to get things going for the week?
I think the trade optimism is helping the dairy market out as well. I mean, China's been a pretty big buyer of U.S. dairy products and the whey components, things of that nature. So maybe that's a little bit of the optimism we've been seeing in the milk markets. Now we're trading close to $18 on November milk here, mid-17s, pushing that area in December. I think it's turned into a quick window to get some hedging opportunities in, especially how fast we came off the lows here. So again, the fundamentals there, still got a lot of supply, but I do think there's just been some short cover in here with that optimism of some type of trade, maybe boosting up, some of those dairy exports, here from the United States into the Asian countries, as well as obviously China.
Quick peek at the outside market trade as well. Energies, crude oil quiet Monday, gold under heavy pressure, stocks trading their way mostly higher on the day. So some things to watch there. John, any final thoughts for us here as we close out the show today?
I know guys are still busy, but you got to stay active in these markets because of how quick and fast these headlines can change things. Just make sure you're just evaluating yourself every single day. Where's the risk at now? Beans are up 80 cents. Is the risk now upside or downside? And that type of thing. If you got beans in the bin, corn in the bin, things of that nature, just to make sure you're understanding where your positions are. Feel free to reach out to guys like myself just for information. That's what we're here for. And feel free to give us a call.
How can they get in touch with you, John?
Number is 1-800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com and the website, totalfarmmarketing.com.
Always good to hear from you, my friend. John Heimberg, Total Farm Marketing. Thanks for joining us here on Market Talk. Have a great week.
Sounds good. Have a great week, everybody.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.